Hi, I'm Carrie Hunt, NAFCU's General Counsel and SVP of Government Affairs, and I'm here with Mike Coleman, NAFCU's Director of Regulatory Affairs. And we are here to give an update on some regulatory issues, ones that are sure to emerge this fall and also in the first quarter of next year. So Mike, what on earth am I doing with all of these programs?
Well, Carrie, I'm guessing it's to remind everyone out there that NAFCU's annual conference this year is in Las Vegas, Nevada.
That is true, but they are also here to give a little demonstration of the regulatory threats credit unions have on the horizon. So I have two piles. I have the NCUA and I have the CFPB.
I'll go ahead and take the CFPB. They're very large and multifaceted.
Awesome, and I will take the NCUA. So Vegas is all about taking risks. We are over 4 years since Dodd-Frank has passed, and the regulator, in my opinion, is still not satisfied that all risky behavior is out of the system. If you take a look at the rules that NCUA has issued or finalized this year, you'll see just that they are all about reducing risk. We have a mandate that certain credit unions have to have government-backed liquidity sources. We have a proposal on stress testing from some of the largest credit unions. This year they also finalized that rule on loan participations, which tamped down on that and had some increased provisions there. And at the NCUA board meeting next week, we'll see a rule on credit union service organizations. What can possibly be left?
Well, the next biggest thing that we're expecting is prompt corrective action reform in the form of changes to the capital rules. NCUA still does not appear to be satisfied that credit unions hold enough capital, even though the average is about 10%, 3% over the statutory floor. So what do you think this is going to do for credit unions? What's going to be the impact?
Well, I think that ultimately we're going to see that some credit unions are going to have to hold more capital. I mean, that's the bottom line. It seems that NCUA isn't satisfied in this regard. I don't think that it's going to impact all credit unions, but really how NCUA's thought gets implemented remains to be seen. Inevitably, with the NCUA, we tend to disagree with where the risks lie and how much risk should be in the system. If you look at some of those credit union failures, some of the largest failures were not due to capital issues, but just fraud or mismanagement. And plus, in the current low rate environment, credit unions are already struggling with small margins.
So the NCUA is taking up the budget this month at the November board meeting. What does your gut tell you is going to happen, given that so we're looking at the budget and also the range of assessments that we can expect for next year?
Well, I think that Lady Luck may be on our side in regards to assessments. If you look at where we are in terms of the economy, what borrowings NCUA likely will need relative to the NGNs, and really just kind of the general direction that NCUA has gone in relative to assessments, I do think we'll see a small range of assessments for next year, and hopefully we'll end up with a zero bill come September. Of course, anything can change, but certainly that would be our hope. In regards to the budget, I think not so favorable. We've seen increases year after year, and I will know for sure on Thursday, but I don't think this year will be any different. I think that this is another area where we have fundamental differences with the NCUA. We look at the number of credit unions that are continuing to shrink and think that NCUA needs to look at their resources. So changing gears, I know you're headed up to the CFPB roundtable in Boston next week. What is on the agenda for the CFPB?
Well, as you can tell, the CFPB's stack of chips is large, and they have their eyes set on a lot of different issues. So the roundtable next week in Boston is going to focus on the TILA-RESPA combined disclosure, know before you own. And it is being held in conjunction with the field hearing that's being held earlier that day. That's what the focus of the field hearing is TILA-RESPA combined disclosure.
And traditionally, when the CFPB has had these types of hearings, it's all hush-hush. They release the rule. There's, hypothetically this time for public comment, and then, everyone's fast and furious trying to discern what the CFPB is doing. Do you expect that this time it'll be any different?
No, and I think we can expect that the final rule will be issued in conjunction with this field hearing next week in Boston. And one of the things that, this is obviously going to be a focus of the roundtable that's being held later that day that our credit union members are attending, but we're also going to be discussing other issues that the CFPB is doing, including mortgage rules, qualified mortgages, mortgage servicing, high-cost loans, mortgage loan originator compensation, remittances to a certain extent, I'm sure will be on the table. Obviously the TILA-RESPA integration, and fair lending. In particular, I imagine that auto lending financing will be brought up in the fair lending impacts there as well.
So all of our members are fast and furiously trying to comply with all of the mortgage rules the CFPB has issued. Director Cordray has insisted that that compliance deadline is not going to shift, and that come January, all of these rules will be effective. So what does that mean for our members? How are our members who are still working with vendors, who aren't in compliance yet? What can NAFCU do, and what can credit unions do to make sure they're doing all they can to be on the right path?
Well, NAFCU's continued to urge, as you mentioned, to Director Cordray that these rules the effective date be delayed for at least 12 months in order for credit unions to have enough time to put together these very complex compliance solutions. But one thing that Director Cordray has said in recent months is that the CFPB and their enforcement actions and their examinations are looking for good faith efforts of compliance in the early months of 2014. So we've been pushing the CFPB to define and clarify exactly what those good faith efforts of compliance are. And also, very important for credit unions is the coordination between the CFPB and the NCUA with regards to these good faith efforts for examinations, because, as you know, the NCUA will be examining the majority of credit unions on these mortgage rules, so that very clear and defined expectations between the CFPB and their determination of what good faith efforts are, and the NCUA is extremely important for our members and for all credit unions in the industry to comply with these very complex and very burdensome mortgage rules.
So you think the NCUA and the CFPB are on the same page on this point?
I do not think they're on the same page yet. I think that they are making good efforts and increasing communication on this point, but I think they've got a bit of a ways to go to reach harmonization.
What else can credit unions expect in the regulatory front?
There's a number of issues, not just CFPB or NCUA related. We have NACHA rules that are impending. We're still pushing back on FASB issues, and let's not forget about cybersecurity. And obviously, fair lending is a focal point for both the CFPB and the NCUA, and it's going to be a big focus next year. Also, interest rate risk. This has been on everyone's radar for quite some time. We expect the focus to be on that again next year.
Yeah, NCUA's been pretty consistent in saying how concerned it is for interest rate risk. We've heard from a lot of our members that they're having disagreements with the examiners on really the modeling that they have done. And we expect to have some continued discussion and resources on that in the upcoming year. So you mentioned cybersecurity. Is cybersecurity the next BSA? What do you really think that's going to mean?
I certainly hope not. I don't know exactly what that's going to mean in terms of how that's going to play out, but we're obviously going to do whatever we can to prevent that from happening, to have that kind of an impact that BSA did on the entire industry.
Certainly, data security and cybersecurity is key on NAFCU's mind, and we want to make sure that credit unions aren't having to police bad activity, and hopefully will end up in a positive place in that regard. Mention another big issue that's been on everyone's mind. What about Obamacare?
Certainly, it's a hot topic. It's been the focus of not only lawmakers but the industry in general. It's going to be on everyone's mind coming up, as you said. NAFCU has some helpful links on our website that you can take a look at, but also credit unions should immediately speak with their insurance providers, because costs are going to go up. I think that's what we can expect in the coming year.
So in sum, we're still going to see a number of rulemakings coming out of the NCUA that may put a damper on operations, and the CFPB is going to be all over the place. They've also announced that they expect their enforcement actions to tick up, so we'll see if that has a trickle-down effect on credit unions.
What do you think that's going to have on the lawsuit front in terms of expected litigation or ongoing litigation?
Well, on the lawsuit front, we could see some positives. NCUA could still see some recoveries from the securities lawsuits, and that, again, would be beneficial to help make sure that corporate assessments are low. And there's still the outstanding interchange suit. In that, we will see briefing from the merchants next week. We'll have oral arguments on January 17, and then we'll see a decision some months after that. So still a lot of unknowns in that regard. And we still think there's a good chance that the Fed can prevail in that regard.
Any more positive news out there?
Well, at NAFCU, we think that enough's enough in regards to regulation, and we hope the regulators are going to recognize that credit unions are really drowning in regulatory burden. We're pushing for changes to investment rules, changes to fixed asset rules, improvements in the waiver process. We've asked for improvements relative to MBL and other areas where credit unions can request waivers. So we hopefully will continue to move in a positive direction in that regard.
Anything about on derivatives you expect?
Yeah, we also, NCUA should be finalizing their derivatives rule. They've been working on that for some time, and for some credit unions that may see some positives in regards to interest rate risk.
Excellent. I'll be giving you regular updates on regulatory issues in the year to come, and the Regulatory Affairs Division will be unveiling a new monthly update in the coming year on all relevant issues. See you in Vegas.